Well, hello and good morning. It's me, Kenny Polcari, once again coming to you from the Boca Resort in Boca Raton at this conference that I'm attending. Today is Wednesday, April 26, 2023, and what is it that you need to know? Well, companies are reporting beats on the top line, but they're offering tepid forward guidance, and that's starting to take root. Google beats and authorizes a buyback. And they also paid Sundar some $220 million. Microsoft makes a big bet on artificial intelligence, but we knew that. 40 more companies are reporting today. Patience is a virtue, so sit tight. And what do we have for dinner tonight? We're going to have the seared scallops. They are delicious and so simple to make. Look, boom. Stocks got whacked yesterday, finally responding to the news. FRC, which had reported on Monday after the bell, revealed that they beat the estimates, but they lost about $120 billion in deposits, which was a bit worse than what the expectation was. And all that did was stir up all the angst once again over the regional banking crisis. And is it over? It may not be over. And that sent the stock down 49%. The KRE, which is the S&P Regional Banking ETF, lost 4.2%. And that includes names like New York Community Bank down 2.2, Co-America down 4.5, Region Financials down 2.6, Truist down 4.3, Western Alliance down 5.5, and KeyCorp down 5.8, along with a host of others. And then we got news that UPS also beat on the top line at $220 a share versus the estimate of $219. Now, this was down 27% year over year, but we knew that. That was expected. I'm just putting that into focus. But they warned that the macro conditions would continue to put pressure on the company, and the shift from goods to services is depressing package demand. Well, you never know that by coming to my house. They reported a 6% drop in revenues, also confirmed that 2023 full-year earnings would come in at the low end of the range, $97 billion versus $99.4. And that news set UPS down 10%. 10%. Now, look, when FedEx reported back in March, they expressed excitement about how their margins improved on the back of efficiency efforts, and they raised the outlook despite a shipping slowdown, and their stock rose by 10%. So, wow, what a difference a day makes. In total, we had 37 companies yesterday report during the trading day, and 32 of them beat, 5 of them missed. That's like an 88% beat rate, right? Which is well above the historical average, which is somewhere in the mid-70s. After the bell, we had 14 more companies report, and they all beat their estimates, right? That's 100% beat rate. Now, you got to think that they lowered the bar a lot. In any event, the markets and investors, traders and algos finally had enough. By the end of the day, the Dow gave back 345 points or 1%. The S&P down 65 points or 1.6. The NASDAQ down 240 points or 2%. The Russell lost 43 points or 2.4%, while the transports got walloped, right? Losing 525 points or 3.6%. Think UPS. We saw tech and basic materials lose more than 2%. Financials, consumer discretionary, industrials, communications, energy, healthcare all lost more than 1%, while utilities and consumer staples ended the day down less than 1/10. Retailers got whacked down 3.3, disruptive tech down 3.2, semis down 3.2, cybersecurity down 2%, metals and miners lost 1.5%. The weakness in the market helped send the treasury prices up and yields down as investors sought the safety of the U.S. government. The 3 and 6 month bills ended the day yielding 5% and 4.8% respectively. The 2-year fell below 4%, ending the day yielding 3.92, and the 10 years yielding 3.39, down from nearly 3.5 only days ago. The Fed is still expected to raise interest rates next week by 25 basis points, even as the economy is starting to show signs of cracking. Yesterday's economic data showed consumer confidence fell, and all 3 regional Fed surveys came in weaker than expected. In a surprise, though, new home sales surged by 9.6% versus the expected loss of 1.3%, and that's a bit confusing. Or maybe not. Home builders are now offering all kinds of incentives to new home buyers, suddenly cost-free. Kitchens and bathroom upgrades are all the rage. Landscaping is now included, and if you push hard enough, you can upgrade all the floors and outfit all the closets. All for no cost. The home builders are giving it all away. I mean, that's laughable, right? Additionally, many of the home builders are also mortgage lenders, and they can tweak They buy down the rates that qualified buyers pay, all helping to keep the home builders alive. After the bell, we heard from 11 more companies, and they all beat. That's another 100% beat rate. Names like Texan and Visa, Chipotle, Juniper, UHS, and two big tech names that had everybody on the edge of their seat all day, Google and Microsoft. And guess what? They both beat by significant margins. And why are you surprised? Google reported $1.17 versus $1.08. That's an 8% beat, demonstrating that their business is holding up okay during the economic slowdown. And for the first time, their cloud unit finally reported a profit of $190 million. The board authorized a $70 billion share buyback. Do you think they should? It was only 2 days ago, so it was Monday, when they revealed that they paid CEO Sundar Pichai more than $220 million in compensation. This after they slashed and burned more than 12,000 jobs along with other efficiencies. And that news hit the tape on Monday ahead of the earnings. And that should have been the clue that Google was going to surprise to the upside and that the news was going to be good. Why? Because if they announced a $220 million payday and then announced a miss in earnings along with weakness in their business everywhere else, you can be sure that investors would have questioned that payday and taken a whole lot out of the stock. So the fact that they leaked the payday information ahead of the earnings should have prepared you for a bunch of good news, and that's exactly what we got. Google trading up more than 1% this morning. And then Microsoft did the same thing, and it's all about artificial intelligence. They beat substantially, 245 versus 223, a 10% beat. Sales soared by 7%. Cloud revenues up 31%. Commercial cloud products rose 22%. In the end, it was a solid report, even though analyst estimates had lowered the bar. And as expected, Microsoft made big bets on artificial intelligence, some $10 billion worth. But we knew that in OpenAI. Traders took the stock up $16 or 5% in the post-market trading. And this morning, it's up 7% in pre-market. This morning, U.S. futures are struggling to find their way. The Dow's up 16 points. That's essentially flat. The S&P up 15. The Nasdaq's up 160. Think Microsoft and Google. The Russell is down 5. Let's not confuse ourselves. While the markets are focused on earnings, it is clear that the economy is slowing down and that the Fed will stay the course, though, to kill inflation. The idea that they could raise in May and in June is now on the table and out there in the public square. And that will continue to suggest a risk-off mood, in my opinion. Eco data today includes mortgage apps. They were up. Durable goods up, expected to be up 0.7%. Ex-transfers of -0.2. Capital goods ordered and capital goods shipped of -0.1 and +0.1. Look for another big day of reports. This morning we're going to get 20 more reports before the market opens. Boeing, Boston Scientific, CME, General Dynamics, Hess, ADP, and Hilton. And after the bell, watch for 25 more. And they include Meta, Roku, eBay, and a host of others. Oil continues to trade in the $77 range and has not yet filled the gap created on April 3rd, right? But we're getting close. And I still suspect that it's going to get there, test that, fill that before it moves higher. Gold, like oil, is just biding its time, trading at about $2,008 an ounce this morning as it builds a base and awaits to hear what the Fed is going to do, right? Remember, rising rates will cause the dollar to rise. That'll put pressure on commodities. Slowing rates or pausing rates will do the opposite. European markets are all lower. The CAC 40 in the lead, down 0.8, while the UK is only off about 0.25%. Everything else is somewhere in between. The story in Europe is the same. It's all about earnings, whether they're disappointing or not, and now some new bank worries on the back of our FRC. The S&P closed last night at 4,071, down 65 points, but it closed on the low of the day, which usually means that we go lower again. As I've been saying, the path of least resistance is lower until we get more clarity out of the Fed, and that happens next week. A raise in May and then a pause will help stabilize the markets. A rise in May and a suggestion that we're going to see a rise in June will put more pressure on stocks. And if they talk about a July hike, oh boy, watch out. I am still in the camp. There is no way that the Fed can or will cut rates in 2023. I just don't see it. Remember, this is not a time to panic. Stay the course. Be patient. Keep putting money away into your account. Maybe just holding it in cash if that makes you feel better until it settles down. Cash can be defined as short duration T-bills, think 3 months, and they're yielding 5%, right? I'm always happy. Give me a call. I'm always happy to discuss it. Okay, so what are we now having for dinner tonight, right? So look at where I am. It is just spectacular behind me. The sky is kind of cloudy and blue, but it's more blue than cloudy. We're going to have pan-seared scallops. It's an easy dish to prepare and serve, and for this you're going to need a pound of mushrooms, olive oil, shallots, chopped garlic, salt and pepper, white wine, and 1 pound or so of fresh bay scallops, right? And then you need chopped parsley just for color. You want to rinse and strain and slice the mushrooms, set them aside. Rinse and strain the scallops, set them aside. Now in a large saute pan, add the olive oil, add the chopped shallots, add about 3 tablespoons of chopped shallots. Turn the heat to high, cook it, stir it, the shallots until they're nice golden brown, right? Now add the chopped garlic, say maybe 2 cloves. As the garlic browns, does not burn, add the sliced mushrooms. Turn the heat to medium, season it with salt and pepper. Cover the pan so that the mushrooms make their own juice. After about 15 minutes or so, uncover the pan and let the mushroom water evaporate. At this point, after it evaporates, at this point, you're going to add the wine, maybe a half or 3/4 of a cup of white wine. Reduce it until the wine has evaporated. In a separate pan, heat up a bit of butter and olive oil. Add the scallops to the pan and sear on both sides. Season them with salt and pepper and then the chopped parsley. When presenting, place the scallops on the plate. Spoon the mushroom and wine sauce over them. You can complement this dish with some wild grain rice, maybe steamed spinach seasoned with salt and pepper and a touch of butter. Enjoy this with that dry white wine that you use to cook. In this case, you could try a Riesling, a Sauvignon Blanc, or even a Chablis works nicely. Look, you know me. I'm always a go-to Pinot Grigio Santa Margherita, but if you want to try something different, any one of those will also work. In any event, I'm on my way down to the conference. Until tomorrow, have a great day.